Let's be real, some markets are kind of confusing when we're looking at them. And that's just because even though we have the knowledge of market structure, we just don't understand the institutional reasons behind why market structure develops and what that market structure is telling us as market speculators. That's what today's video is about, guys. Today we're going to be getting into some market structure, but as usual, guys, we're going to be going into market structure but taking into account smart money. So we're going to discuss how market structure is obviously developed, what it is, and what it tells us as market speculators. What's up, guys? It's T.Mayne back again, and welcome back to the channel. Now, before we do start, if it's your first time on the channel, definitely do take a moment to subscribe. Otherwise, if you're a returner, appreciate you being back on the channel. Save your like until the end of the video once you've watched and received the value that was intended for you. Now, guys, we are going to get into market structure, and like I told you guys, we're going to be discussing from an institutional perspective what market structure is and how we can accurately, or rather more precisely, read the market structure. Now, guys, to begin with, we'll start off with what is structure. So every chart, because we're only moving, or rather because there are only buyers and sellers involved in transactions here in the forex markets, or rather any financial instrument, we only know that charts only move in two directions. So we have swing highs and we have swing lows. What can we conclude about swing highs? So swing highs are areas where sellers came into the market for whatever reason. Swing lows are areas where buyers have come into the market for whatever reason. Now, market structure is made up of us looking at these swing highs and swing lows, and then here's a keyword for us that we're going to be using a lot, and then based on how market is violating these structural highs and structural lows, we are then able to create a story on where the order flow is moving on this particular time frame. Now, the reason why I added time frame is because we know that the market is fractal, guys, and if we're on the 4-hour, we have a beautiful swing high and a nice impulsive move to the downside, and we have a beautiful swing low. We know that on a smaller time frame within this 4-hour impulsive move to the downside, what we do have is structure that further develops, and we will be able to obviously see these swing lows, swing highs, swing lows, and swing highs within this impulsive move to the downside if we scale down onto a lower time frame. So we need to be constantly paying attention to this whole fractal nature of the market. Now, guys, we're going to discuss basically generally how our market structure is created. So initially, wherever market starts, guys, whether market is coming in from the top or market is coming in from the bottom, we have swing highs and swing lows. Now, what we'll be paying attention to is which swing highs and which swing lows is the market violating. Now, we've generally been taught that when we see a market creating lows and violating lower structures, creating lower highs and then violating lower structures, this is classified as a downtrend, and we expect to see the market creating these lower lows and lower highs. Now, let's discuss what's happening inside of here from an institutional perspective. So what we see in this area is some bearish order flow. Why do we say that this is bearish order flow? Because we just spoke about the fact that at every swing low, there are buyers, at every swing high, there are sellers. So what we can see in this case is that, yes, there are buyers in this market. We see swing lows. Obviously, buyers coming into the market, sending prices to the upside. We then see sellers coming in for whatever reason, being able to push prices below where previous buyers came in from. What we then see following through on this momentum is sellers continuously coming into the market and being able to violate our support structures. So what we are seeing continuously, sellers coming into the market for whatever reason and always being able to violate those lower structures. Now, inversely, if we saw an uptrend, what we will conclude, that within this uptrend, yes, there are both buyers and sellers involved as price is moving to the upside, but we can clearly see that there are more buyers involved in this market. Why? Because every new swing high that is being created is being violated by the new buyers that are coming into this market. And so we can then conclude that because the market is trending up, we have a bullish order flow. Now, to speak about how this ties in our whole market structure is that now we have some context as to what's happening when we see market structure developing in a particular area. So for example, lower lows, lower highs would mean for us that there is bearish order flow. Now, because we spoke about the fractal nature of the market, what we also need to include is that if we're looking at this from a 4-hour perspective, from maybe a 1-hour perspective, we know that there are multiple different trends that are happening here. We see a small downtrend that happens and concludes in this area. We then see a small push to the upside, a nice young uptrend. We then see a downtrend resuming. We then see an uptrend, and then we then see this downtrend continue. So we understand that because the market is fractal, in every impulsive phase, we know that there is an underlying trend on a smaller time frame. So what we can conclude, guys, is that order flow changes depending on the time frame that we're looking at. So if we look at this, guys, from a 4-hour perspective, what we can conclude is that there is bearish order flow. But from a 1-hour perspective, guys, we see order flow changing from a bearish order flow to a bullish order flow, back to a bearish order flow, and back to a bullish order flow, and then finally concluding with this nice bearish order flow over there. So guys, we know that now as we're speaking, we're understanding that on every time frame there is something that's different that is happening on that time frame. But what is the point of us mentioning this is that we always want to be trading that higher time frame order flow. So if, for example, we understand that our 4-hour is moving nice and impulsively to the downside, we want to be trading in the direction of this bearish order flow. So once we see our H1 chart beginning to trend up, are we interested in looking for buying opportunities? No. Because why? Our order flow on a higher time frame is bearish. These are our swing highs that are keeping this market, or rather that are keeping the order flow in this market bearish. Once we see these highs being violated to the upside, then we know that from a 4-hour perspective, order flow has potentially changed. Why? Because the sellers that were involved in this bearish run that kept on pushing prices below previous areas where buyers were coming in, sending prices from, now what we see, guys, is buyers coming in at this area being able to violate previous resistance areas where we see these sellers coming in from. Now, guys, remember I told you guys that we're going to be reflecting on institutional concepts here. So what we will call this, guys, every time we see markets breaking these lower structures and violating these lower structures, what this is called is a sign of weakness. Why? Because we are seeing buyers not being able to hold prices to the upside. So every time we see these supports being violated, we know that there are signs of weakness in this market, and obviously there is bearish order flow. Once we see bullish structure being violated, like our previous 4-hourly resistance areas, once we see these resistance areas being violated, what we can conclude by this move is that this move to the upside that has violated our bearish order flow is a sign of strength. So we're now seeing some strength coming into the market, being able to violate some previous resistance areas. So now after we see the sign of strength, we know that every violation of a resistance will be a new sign of strength, showing us that buyers are in control, buyers are in this market, buyers are buyers are consistently able to violate or push prices above an area where previous sellers have come into the market. Now, guys, I hope you've enjoyed this detailed explanation, guys, of what basically our market structure is. Now, we have been reflecting on obviously our institutional concepts, because I know that we all understand, guys, what higher highs are, what higher lows are, but we need to add context to that knowledge. We need to know, why is price breaking our resistance areas? What does that mean for us as retail? What does that mean for market structure? What does that mean for order flow? Because as traders, guys, we want to be trading in the direction of the order flow. If we see higher time frame bullish order flow, are we interested in taking these short-term sells on these lower time frame bearish order flow positions? No. We want to be in the direction of the major higher time frame order flow. Once we see our higher time frame support structures being violated, then we align ourselves in the direction of new higher time frame order flow. So guys, if you have received the value that was intended for you guys in this video, definitely don't be afraid to drop this video a like. Let me know that I am sharing the value that was intended for you guys. If it's your first time on the channel, definitely do subscribe, because we come out with value added content like this every single week. This is T.Mayne, guys, your FX Chasers mentor. Please have a good week, guys. I will see you guys in the future videos. Cheers.